and this is your daily financial news. If you if you remember from the weekend when we talked about the week ahead, we talked about Friday being a half day. If you don't know, a lot of the, how should we say, experienced traders are actually not in the market today. A lot of them will be taking the 4-day weekend like lots of us. Today is a half day and the market will be closed very soon. That said, sometimes on these days when the professionals are not in the office, you get some very interesting reactions, and some might say overreactions. What I would tell you what's going on in the market today is fear is winning. Vernacular of the day, we have risk off. As someone who has zero money in the game, doesn't care if it goes up or down, what I would remind you is let's see if there's follow through on Monday. The big boys are in their Nantucket or whatever, big houses. They are likely still enjoying a food-induced turkey coma. So for me, it's really what happens on Monday. Now, obviously, you do have to remember if you are a crypto investor that Bitcoin is traded 24/7. So it will be interesting to see where that goes. But I looked this morning. The Dow was down nearly 1,000 points last time I checked. Crypto, or at least Bitcoin, is now in bear market territory. It's down 20% from the peak. What else do we got? Bonds rose, which means yields fell. Oil fell. Travel stocks fell. Retail fell. Stay-at-home stocks are up, like Zoom are up. And then finally, the big creme de la creme for me is the dollar. What's going on with the dollar? Again, rates are going down today. However, the dollar is getting stronger. The dollar has been and always will be, for me, kind of the biggest indicator of fear. It's a worldwide indicator for me. The dollar today, as of this recording, is at a 17-month high. Let me make sure I got that right. Yep, 17-month high. So again, it is an interesting day to watch. Again, I am watching as a spectator, not a fan. Here's the difference. Spectator, I don't care who wins. A fan, you have a team, right? You're in the market, you're shorting, you're going long. I'm just a spectator eating popcorn, watching the show, because I don't have a single dollar invested in this. And it's going to be interesting to watch. There are, hopefully there's not a lot of people on margin. If you are on margin, you can get got in a fear-based sell-off, especially in crypto. It'll be very interesting to watch how many paper hands are washed out because they got cocky with too much leverage. But yeah, that's what I'm watching today. Again, as a real estate investor, all of this craziness doesn't impact me one iota. In fact, today is Black Friday. There is talk about this Black Friday being a home run. And I brought you that several days ago, talking about I expect it to be a record setter. Generally speaking, consumers want to spend. Generally speaking, we like to shop. We are being told nothing there, nothing is going to be in stock, or at least that's what we are made to believe. So people are going to shop early. And of course, retailers will not be discounting. I finally saw an ad for Walmart Black Friday. I hadn't seen one in weeks, any ad. And they used to just, hit my feed, hit the TV channels that I would catch up on. It was crazy. So again, very interesting stuff. Let me know, any of you going out for Black Friday? And if you're going out, what are you getting? What are you buying? I'm just curious. Getting a big screen TV? What are you shopping for? Just curious. I haven't shopped on a Black Friday because I used to work in retail, and those days are nuts. It's crazy. There's a couple of things going on in the gift giving market that I think is very interesting. First off, there is an increased trend towards giving experiences. I love this. Giving experiences such as spa, concert, plane tickets, cooking classes. Folks, Let's make some memories. Let's create some experiences. Let's stop filling up our houses with stuff. Stuff. Yeah, crazy stuff. So, very interesting stuff going on. In addition to that, we have the K-shaped recovery shaping up to do it again. This time is for Christmas. The K-shaped Christmas is very interesting. Looks like, unfortunately, 11.5% of Americans, this was based on a Deloitte survey, 11.5% of Americans are essentially skipping Christmas. Many of them are skipping Christmas because inflation has hit their budget. Again, inflation hits the low end a lot. It's a tax, and I don't know why we don't talk about inflation as a tax. Inflation is a tax. It is so bad that now, based on this Deloitte survey, 11.5% are not buying gifts. They just can't. And as someone who was a kid who had one of those Christmas where we couldn't afford to buy gifts, we got hand-me-down stuff, I can tell you that's just terrible. One of the reasons I will be giving the Toys for Tots this year, my mother has been doing that for 5 years. On the channel, we will raise money for Toys for Tots. But if you're in a position where you can give and help kids, Toys for Tots, Toys for Tots is a great charity. It brings a lot of smiles. Yeah, that's the charity I will be giving to in December for sure. What else do we have here? China property market. A lot of stuff going on. They've created their own environment. But when I step back as an outsider, there are two things that I watch. One, remember cash flow is important. And right now, property developers' cash flow is anemic. If nobody's buying homes or apartments, the cash flow stops, debt structure blows up, can't pay the workers, can't pay the people building them. It's not good. But second, foreign capital. It is very, very clear that foreign capital is taking second or third priority. And I suspect that foreign capital will not be as interested in investing in China going forward. These all things are going to be interesting. So first off, it'll be more expensive in China, but you have to remember that money has to find a home. So does it find a home in the US? Does it find a home in South America? It is going to be interesting going forward. I don't know about you. Does anybody have a Sears or a Kmart near them? The last Sears or Kmart near me closed down, I think 3 or 4 years ago, like near me within like 20 miles. And I say that as somebody who worked at Sears for a decade. It looks like this is going to be the last holiday season for them. I actually didn't even know they were still around. But anybody out there have a Sears or Kmart near them? Maybe they're just not in California. I don't know. Holiday retail sales. This is what I'm going to follow through. Again, I'm expecting retail sales to be a blockbuster. I will look forward to the numbers hopefully over the weekend, if not early next week. Looks like the prediction I got was somewhere between 8.5% and 10.5% growth. I'm going double digits, 10% or above. What do you think? Let's play over under again. 10% retail sales for the holiday season. I'm taking the over. American consumers want to spend. They have $1.3 million or trillion dollars in excess savings. We shall see. I just have to bring this up one more time. Buy now, pay later. Don't do it. If you can't afford to buy it twice, don't buy it. Don't buy gifts. Dude, buying gifts with buy now, pay later is financial servitude. We are already selling hours of our life away. Don't sell more. If you can't afford it, do something else. Buy now, pay later is, I wish Dave Ramsey or Susie Orman or somebody with a big voice would call this out. And maybe they have and I haven't seen it as I'm not their crowd, but come on, people. Don't do it. Don't do it. Don't do it. Lastly, let's talk real quickly about 2022. I want to be very clear on the 5 things I see coming. Some people continue to ask. I see housing prices slowing down, or maybe said values. We can't have 16 or 18 or 20% appreciation Again, not possible. That will slow down. To be clear, a slowdown is not a crash. Slowdown is not a crash. Rent will slow down. We cannot have rent explode. What was it yesterday? Gilbert, Arizona, 105% in a year? Come on, people. That's not healthy. Wages are going to increase. Wages are going to increase. Wages are going to be the thing like oil in the 70s. When people look back in a decade, they'll say the hourly wage worker was the thing that took hold and forced inflation to be a 4 or 5 year problem. Rates are going to go up. Yes, I know the 10-year is down today. That is because fear has taken over. I believe as we get retail sales numbers, that will reverse, but we shall see. And then finally, if you read my book, One Rental at a Time, you know the most important thing is the affordability index. The affordability index is made up of price, interest rate, and wages. I did an interview with the three amigos several weeks ago, showing you the affordability index for Fresno, California, where I invest back to, I don't know when it was, 1990. Again, I look at that, it's a quarterly number. So again, that's what I think. I think affordability falls slightly. But because wages are up, affordability doesn't fall as much as many people think. Finally, a couple of things. I did a video yesterday about rich and wealthy. This is a conversation that Dion and I had, I believe. And I want all of you to be wealthy. If you watch that video, you'll know what I mean. Rich is what I chased for 35 or 40 years. Rich means you have to continually do what you do, whatever that is. Wealthy, you can be wealthy on 60 grand a year. There are two things that go into that statement. One, where does the income come from? Needs to be passive income, meaning 5 grand a month. And two, you need to have a lifestyle that is less than half that number. For example, if you can live on 2 grand a month and you have $5,000 in passive income coming in, I want you to know that you are wealthy in my book. I want all of you to be wealthy. One rental at a time is about helping you have a better financial future. Thousands of people are doing it. That's why we have this goal over our shoulder. That's why people are signing up for the course, Facebook group, all those amazing things. And then lastly, I read this stat yesterday that I have not independently verified, but it's one of those that just makes me feel good. And I want you to feel good this morning. I know the world is blowing up around us, but this is what I want you to know. You had a 1 in 400 trillion opportunity of being born. 1 in 400 trillion. You have already won the lottery 3 times in a row. The chances of becoming a millionaire are about 1 in 100. I don't care what it is, 1 in 1,000. You already won. Everything from now on is gravy. So let's go. Do the work, focus, realize that I'm talking about getting wealthy over a decade. In the beginning, it is slow. Most of us have to learn to save a little extra and stop the needs and wants, or understand needs and wants. We need to understand that we're selling futures, our future hours. Control it, work on it, get better, talk about money. Did any of you talk about money over Thanksgiving dinner or lunch or whatever you call it? I hope you did. We need to take money out of the darkness and shine a light on it. You have already won simply being born. Everything else from here is gravy. Let's go. Take care, everyone.